Alright guys, it's your boy Shades and Trades here. I'm gonna go over my swing trading strategy that I have never revealed until now because we are now, I'm not gonna say we're officially in a bull market, but we're out of the bear market. That much is for sure. And this strategy for swing trading does not work very well in bear markets because you get a lot of false signals. And when we're looking to swing trade, we're looking to swing trade to the upside, of course. So I'm going to use ILIS here as an example, a perfect example of why you do not want to use this strategy in a downtrend because you get a lot of false signals. So here's the ILIS downtrend, the ILIS bear market, if you will. And as you can see here, I do have the MACD, so we will be using a MACD. The MACD has a period for period 1 it has a 12, period 2 has a 26, and period 3 has a 5, and the average is closed. Nothing crazy, but as you can see at the start of the downtrend, you get a crossover here. And what would have happened, guys? What would have happened if you bought on this candle? You got a crossover, and if you had bought here for a swing trade, because this is the daily chart, we're looking to swing trade for a couple of days and take some profits. What would have happened? It gapped down and it tanked. Oh wait, no, my bad. It gapped up actually. No, yeah, it did gap down and tank, and you would have lost money. And then you get another one right here. You get a crossover. You would have bought in here, and what happened? Boom. Then you get a crossover right here, and that one was actually a good one. Not there, here, and you actually would have bought in at around 26 to 27 cents, and you would have sold up here at around 36 cents. So you would have made some nice money on that crossover here. But the point I'm trying to make and what I'm trying to demonstrate to you is because we were in a bear market, this strategy was useless. So I never really revealed it until now. I think now's the time. We did have the 50 EMA cross over the 100 EMA, and the SPY is going sideways as I predicted in the Discord today. I told you, like, hey, probably going to go sideways. We've seen this before. And as you can see, let me get the 50 EMA and the 100. Boom, there's the crossover. And it's rare that happens. So when it does happen, it usually means we're gonna dump before we go on a bull run. That's usually what it means. And again, you can slap a 50 EMA and a 100 EMA on the daily chart and go do your research on your own because I've already shown it multiple times. But what we're here to talk about is the swing trading strategy. Now that we're on an uptrend or at the very least sideways, because once the stock or the market as a whole goes sideways or on a bull run, this strategy works very well because it does not give you very many, if any, false signals because we're no longer in a downtrend. In a downtrend, getting a signal from the MACD usually leads to buying at the top, and you end up holding a bag like I showed you in these arrows here, except for this one, that's the exception. But that's besides the point. Once we started going sideways here, look what happened. Here you would have gotten a signal, a buy signal right here on this. Wait, where's my arrow? On this crossover, you would have bought here at 14 cents, and it went up as high as 21 cents, and you would have made money on that one. And it's starting to go sideways here. You do not get a crossover until way back here, and it popped. You would have bought in at around 11 cents, and it popped to 12 cents, so you could have scalped it. At best, you probably would have seen this price action, and at some point you would have realized maybe it's time to get out. And then you get another signal here, and maybe you would have made money. Depends. If you sold on that day, maybe, or else you would have had to wait for this pop over here. But you wouldn't know that. You probably would have taken a small loss. And as you can see, we're still in a downtrend, mind you. That's why you're getting those false signals here. But once we actually start going sideways over here, look, this is the sideways action. This is very, very clear, obvious sideways action. Even the EMAs are going sideways here. So once you get to the point where you're going sideways, look what happens. Let me remove those horizontal lines and the trend line and the arrows. Let me hide everything besides the MACD signals. So you get a crossover right here. I'm sure you remember, for those of you who have been a part of the Discord for a while, you remember me saying like, hey, time to load up right here. And you would have loaded up right here. There's the cross under. I think I alerted it around here too, if I recall, because people didn't react to the news piece. But that's besides the point. You got a crossover here. Or you even got a crossover here. You could have added, and it popped 100%, and you would have made money. You get another crossover right here, and it popped. You get another crossover right here. It did not pop, and not anything crazy. Not anything crazy, but it did go up a little bit, and you could have scalped it. And then again, another candle where you got a pop, and that was your entry point as well, and it still went up the next day and held up here, so you could have taken profits anywhere along the way. When you realized, hey, this thing's kind of going sideways up here, usually means you're going to dump. And same thing here. You got a buy signal here on the crossover, and you would have made money on this most recent move upward, right? So the point I'm trying to make is it's reliable, but just don't think it's 100% win rate. Even on sideways action or uptrends, you're still going to get the occasional, it goes against you sometimes. But either way, more often than not, you're going to be right and you're going to make money. And I'm just using a penny stock as an example. Let's look at, I think the SPY is a better example here, because you can swing trade options, and I might start swing trading options now. I did not want to swing trade options in a bear market, as you can imagine. But here you got a crossover on this candle. You could have bought calls either as soon as it crossed over at open on the daily, or you could have waited till market close. That's on you, how you want to play. But let's just say, let's not be optimistic and pretend like we would have bought the bottom. Let's be pessimistic and say you would have bought all the way at the top here. You would have bought right at market close at 388.14. You would have bought calls, and it would have popped as high as 393, and you could have made money. That's like almost $4 per. Yeah, $4 move in the contracts. That's no joke. And then it still kept climbing, so you could have made even more money. And it's still on an uptrend, so the MACD has not crossed under. So it's kind of, now we have to wait for a crossover for us to get back in. And so it works very well in a sideways market, or ideally in a bull market. Let's go all the way back in time here for some bull market action. As you can see here, I'm just going to use a random piece of example. We cross under, we dump, we get a crossover here. You could have, right here, you could have loaded calls and you would have made money. It did keep going. It did keep climbing up, as you can see. Yes, it pulled back a little bit, but it still kept going up. It's very reliable. Here, same thing. You got a crossover here, and it gapped up and it just kept going. So I can go on and on, guys. Again, I have not revealed this one because I started the Discord back, when the bear market was just getting started. So that kind of sucks, unfortunate, but I think there's a lot of potential here. So add the MACD to your daily chart. Again, the first period is 12, second period is 26, and third period is 5. And trust your signals, but you do have to look at your individual stock, because every stock is different. Let's look at Riot. Before I go, one more example. The market might be skyrocketing. The market as a whole might be on an uptrend, but if your specific stock is in a downtrend or sideways, just be very wary of that. So always look at the trend of your current stock. Just because the market as a whole is going up doesn't mean your stock is. Maybe it's in a downtrend for whatever reason. Maybe it's in a bear market of its own, like oil and gas or whatever. So just be aware of that. Always look at the overall trend for your specific stock. Don't just assume everything's on an uptrend with the market or going sideways with the market. And again, here you would have gotten a signal on this candle, and it did climb up. Slowly but surely it did. So you would have made money there. You got a false signal here, and you would have lost money unless no, you couldn't have, yeah, you can't hold options. Oh, by the way, you don't have to use options. I kept talking about options, but you can buy shares on a crossover, and you can definitely hold those. Unlike options, options you cannot hold, but shares you can. So, but just be wary that sometimes, as you can see by the sideways action here before that uptrend, you did get a false signal here, and you would have lost some money. No big deal. And here you would have gotten a crossover on this nice green candle, and you could have captured major profits here on this run up. And we're about to get a cross under. Look at that. We might get a cross under, and look at that big red bearish candle. We'll see what happens if this is truly going to be an uptrend and the start of the bull run. This could cross under and then eventually cross over, and you go in for the swing. But just wanted to show you many examples, guys. It's not 100% win rate. If it was that easy, we'd all just slap on a MACD with 12, 26, and 5 as our periods. But it works, as I just showed you. It wins more often than it loses. As for stop losses, again, it's going to depend entirely on whether you're trading options or shares, and it's going to depend entirely on the specific stock or ETF. So I can't really tell you like what your stop loss should be. It should be based on, it depends on the movement on the stock. For example, Riot, I would have set a stop loss just by looking at the chart here. I would just set a stop loss underneath the candle that I entered, honestly. Like I entered here, I would have set a stop loss down here, and I would have made money because it did go up in my favor. Here, I would have set a stop loss at 3.70 because I just said I would set a stop loss at the bottom of this candle that I bought in at. And I would have gotten stopped out the next day, maybe, more than likely. Yeah, I would have gotten stopped out, and I would have lost maybe, assuming I bought at the top here at 392, I would have lost like 20 cents per share or something crazy like that. But you would have more than made up for it on this big move here. So it's, it's, again, not 100% win rate, but more often than not, you will capture big profits and slowly but surely grow your account. Especially if it's something like ILIS, where ILIS is pretty reliable, especially now that it's going sideways. So, look, it just crossed under, and we'll probably get a crossover at some point, and we'll find that new bottom. That's what I predict, at least, based on my experience. Anyways, that's it for the video. As always, like, subscribe, and oh wait, no, this is a Patreon exclusive, so don't like and subscribe. I'll see you in the Discord, guys.